In a world teetering on the brink of financial collapse, the US faces a debt crisis that could rewrite the rules of global money forever. Enter the Genius Act, a bold legislative push to back stablecoins with American debt, funneling billions from around the world straight into the Treasury's coffers. But is this salvation or a sophisticated sleight of hand designed to devalue currencies, seize assets, and tighten technocratic control? Critics warn it's a crypto rug pull in the making, with whispers from Putin's inner circle calling it out as a desperate bid to offload America's burdens onto the global populace. And look to Vietnam, already a beta test for the future, where mandatory biometric IDs have led to 86 million bank accounts frozen or erased overnight, all in the name of security. So is this the blueprint for what's coming for us, for our wallets? Today, we sit down with economic oracle and my good friend, Jim Rickards, who always cuts through the noise. Jim, thank you so much for joining us, especially during a time where the world feels very heavy. Welcome back.
Thank you, Danielle. It's great to be with you. And I think your description is pretty apt. There's a lot to talk about, and we can always get through it. But yeah, there's a lot going on. I specialize, or we try hard to stay ahead of the curve, tell people what's going to happen before it happens. But with so many things happening at once, that gets more challenging all the time. But we keep at it, right?
Well, let's break down this Genius Act, because it's not, the Genius Act is not new news. It was out this summer, but it's back in the spotlight with the recent remarks by Putin's advisors, his explosive claims of a U.S. debt rug pull, and of course, the tragic assassination of free speech advocate Charlie Kirk, raising fears of financial and digital overreach. Is this warranted, Jim?
It's a very big deal, and there's immense danger in it. But it's not the danger that Putin is talking about. In other words, there is a narrative around it. Well, there are two narratives around this. They're both wrong, and I'll explain why. So the first narrative is, coming from the White House, also Howard Lutnick, who's a big backer of Tether, which is one of the biggest, I think, stable coin. So what the Genius Act does, it facilitates the sponsorship and issuance of stable coins. Maybe we should take a minute just to explain what a stable coin is. It's a cryptocurrency, but so-called. Query whether it's a real currency, but it's a cryptocurrency. But what a stable coin purports is that you give the sponsor $1, they give you a token or a cryptocurrency, whatever it might be, and they pledge to maintain that value. It's always going to be worth $1. So you can take your stable coin, do whatever you want in the crypto world. But if you choose to cash it out for dollars, you get your $1 back. So put $1 in, get a one stable coin, one token. As and if you want to redeem it, you redeem it and you get your $1 back. So that's the value. The biggest one is Tether, but there are a bunch of them out there. The Trump family are sponsoring new cryptocurrencies. New stable coins. I want to be specific about stable coins. Others are doing them. I mean, candidly, Daniel, I get 2 or 3, offering documents per week for, invest in this new, not just investing in the coin, but investing in the sponsor for the coin, the companies that are doing it. So it's everywhere. So that's what a stable coin is. Now, so what's the big deal about stablecoins? Why are they so popular? Why are people sponsoring them? Let's look at it from both sides, the sponsor's point of view and the investor's point of view, the buyer, I should say, of the stablecoin. For the sponsor, it's easy. So you get the $1 or $1 billion or whatever it is. You issue 1 billion stablecoins, whatever, again, 1 for 1, whatever the amount is. What do you do with the money? You buy basically treasury bills. You can buy anything you want, by the way. That's the Genius Act. Is part of the it's a kind of regulation, but it's a regulation that says we're not going to regulate you very much. So it's a little bit of a shield more than anything. But what the sponsors generally buy are treasury bills. Now, what's up with treasury bills? Very liquid, very large market, not very volatile, easy to sell, and if your customer wants his or her money back, you sell some treasury bills, boom, here's your money. It kind of works very well. But here's the difference. The stablecoin gets zero. You're paying no interest on the stablecoin, but the sponsor keeps the money on the treasury bills. Treasury bills yield, around 3%. It's not 20%, but if you're and there's unlimited leverage. You can issue as many stablecoins as you want off a very small or even zero capital base. So if I'm the sponsor, I take your money, I pay you nothing, I buy treasury bills, and I keep all the money. Pretty good business model. I mean, what's not unlimited leverage, pure profit, no return to the investor, and very low operating costs. You need a server network, and you need some computer coding, but not much more than that, and infinitely scalable. So it's just free money for the sponsor. So you can understand why sponsors want to jump into this. They pay the customer nothing, and they keep all the money. Pretty good deal. So that's from the sponsor's point of view. Why would the customer be attracted to this? Why would you buy a stable coin if you're not going to get any return? I can buy stocks or gold or bonds. I can buy a lot of stuff and get some kind of return, or at least a capital gain. But why would you buy it if you don't get any return? The answer is that the stable coin itself is the token that you use in crypto world. The vast majority of all the Bitcoin purchased are purchased with Tether. So in other words, people buy Tether. It's like, okay, you don't have any return. Okay, because it's always worth $1. There's no yield, but it's always worth $1. So you take the Tether and buy Bitcoin or Ripple or any other cryptocurrency you want, Solana. I mean, there's thousands of them. So stable coins, Tether in particular, are the currency of the realm in the crypto world, and they're used to buy other cryptocurrencies. And of course, if you buy Bitcoin and it goes up, you make money on the Bitcoin. So people don't care if they don't get a yield on the stable coin itself, because they get out of them pretty quickly to buy other cryptos. And of course, the sponsor, as I mentioned, is making all the money. So it works for the customer because it's currency in crypto world, and it works for the sponsor because they keep all the money. So that's what's driving. Those are the economics driving this proliferation of stablecoins. So what are the problems? What's the danger here? Well, Russia says that, hey, U.S. And other critics have said the same thing. The other narrative is, hey, United States, you got $37 trillion of debt. Your debt to GDP ratio is out of control. Your deficits are out of control. The dollar's going down. Foreign countries are dumping dollars, dumping treasuries.
Right.
Everybody's getting out of the dollar. And you've found a new way to prop up the treasury securities market by allowing the Genius Act, allowing these stable coins. If the money is used to buy treasury bills, you've found a way to keep issuing treasury bills and prop up the treasury market, even as the world is dumping dollars and getting out of treasuries. And then someday you'll devalue the stable coins, or confiscate them, or shut them down, and basically get away with murder in terms of issuing government debt. So that's the Russian critique. The Russian critique is completely wrong. Here's why. First of all, it's not true that the world is dumping treasuries. It's just not true. The Treasury issues a monthly report called the TIC report. I think it's Treasury International. I forget what the C stands for, but basically, it's a spreadsheet of all the Treasury securities owned by all the foreign central banks and finance ministries. And it's publicly available. It comes out once a month. It's pretty current. You can look at it. It does not show big reductions in treasury securities held by foreign central banks, China in particular. A year ago, yeah, there was a little downtrend, but it's been very stable lately. So using hard treasury data, not rumors, not narratives, but hard data from the Treasury, it is not true that foreign countries are dumping U.S. treasuries. Now, to the extent that they went down a little bit, maybe a year ago, that does not, they do sell treasuries from time to time. Mostly they roll them over. They mature and they take the money and they buy new ones. They're not dumping treasury, but to the extent that they do, that is not a sign of getting out of the dollar. What that means is that there is actually a dollar shortage. And this is what people don't understand. When central banks, they say, the dollar is 60% of global reserves. It's not actually the dollar. It's treasury securities denominated in dollars. You don't hold, if you're the central bank of China, you don't have pallets of $100 bills sitting in the basement. What you own are treasury securities, bills, notes, and bonds. So what if you need cash? What if you actually need dollars? What do you have to do? You have to sell treasuries, get the dollars, and then use the dollars for what? What's China doing with the dollars? They're propping up their currency and propping up their banks and propping up their corporations that issue dollar debt that can't repay it, that are going to go bankrupt. In other words, far from dumping the dollar, it's actually the opposite. The world is desperate for dollars. And to the extent anyone sells treasuries, they're trying to get dollars to prop up their own currencies. So that whole dumping the treasury narrative is just wrong.
Wait. I have a question. Sorry to interrupt you, Jim, because I know you're making your point, but just help us identify then when we see the headline, for the first time in 35 years, central banks hold more gold than U.S. treasuries. What does that mean? Like, okay, maybe they're not dumping it, but they're not adding treasuries and they're preferring gold.
Well, that's true. Yeah, central banks have been net buyers of gold since 2010. That buying has increased. That's mainly a reaction to the fact that the U.S. has weaponized the dollar and is using it for economic sanctions. Now, one of the things that helped Russia, there have been over 200 separate U.S. economic sanctions imposed on Russia by the United States. There have been 19 sanctions packages, each package of which includes numerous sanctions imposed by the EU on Russia, all because of the war in Ukraine. They have all failed. All these sanctions have failed. The Russian economy is outperforming the U.S. economy. The Russian ruble is stable against the U.S. dollar. But why? Why has Russia been able to power through it? Well, there are a lot of reasons. One of them is that all their trading partners never joined the sanctions. India, China, Brazil, Venezuela, South Asia. None of these countries joined in the sanctions, so Russia's doing fine. All the sanctions have failed. But if you're any of those countries, if you're Saudi Arabia or Russia or China, and you look at the United States, say, hey, these guys have weaponized the dollar. The United States is in the process, the United States and NATO, I should say, are in the process of stealing $300 billion of Treasury securities from Russia. Russia sold oil legitimately, got dollars legitimately, bought U.S. Treasury securities legitimately, put them in a custodian in Europe called Euroclear, and that there's about $300 billion there. And now the U.S. is stealing that money. So if you're any trading partner, I'll include allies like Japan, you're like, hey, hold on, what if the U.S. doesn't like what I do? What if in some future struggle the U.S. decides to steal my U.S. Treasury securities? You better get gold. And by the way, this is why Russia has been able to survive, in part because Vera Nabiullina, who's the head of the Central Bank of Russia, and I say she's the only central bank in the world who actually understands her job, seriously, she put over $150 billion, 25% of Russia's reserve position in gold bullion. Bars, basically, gold bars. So it insulated Russia to a greater extent because you can't seize the bullion. I mean, you have to invade Moscow. They're not going to do that. But if you have physical custody of physical gold, it's not digital. It's easy to, you can't seize it, basically. You can't interdict it. It doesn't go through SWIFT. It doesn't go over FedWire. It's just there, and you can't take it. And so that's why central banks are buying gold. But that does not alter the fact that they also have very large treasury positions. So both things are true. Danielle, you're right. The central banks are buying more gold. You're right about that. But it's not true that they're dumping treasuries. They're holding onto their treasuries. Basically, the reserves are increasing. So yeah, if you run a trade surplus and your reserves increase, this would be Japan, South Korea, China, and others, Taiwan. You got to buy something, and they're buying treasuries, and on that they're buying gold. You're right. But they are buying more gold, but they're not dumping treasuries. Now, both things are true. So getting back to, so the Russians are wrong that this is a disguised way of propping up the U.S. Treasury market, because the U.S. Treasury market is doing fine. Anyone notice that interest rates are going down? The yield to maturity on the 10-year note was stuck in the range between 4.25% and 4.5% for like a year, and it just dropped to 4% and is heading lower. I expect it to go, have a 3 handle and down into maybe 2.5% before this is over. Treasury yields are dropping. You know what that means? It means prices are going up. There's a huge rally in the 10-year Treasury note. Don't tell me, this is not you. I'll speak to Putin. Don't tell me people are dumping treasuries. There's a scramble to buy treasuries. The market's rallying.
It makes me wonder then, because that was a strategic move, in my opinion. They knew that quote would go viral. It did. People jumped on that bandwagon. What do you think was the strategy behind that? I mean, are they looking to get the BRICS momentum behind them and accelerate the push for a non-dollared reserve system? I mean, what do you think was the point of that calculated statement? We'll get right back to the interview, but this is an important moment to ask yourself, when the next crisis hits, will you be properly positioned or wish you prepared earlier? I've spent over 2 decades reporting on global economic shifts, and what's happening now is unprecedented. In moments like this, timely decisions are critical. That's why we've put together the Private Wealth Playbook. It's a free guide showing you how to use gold and silver strategically for protection, privacy, and long-term performance. Click below or visit DannyReport.com to download it now so you can move forward with clarity and confidence. Now back to the show.
Well, I don't know. I haven't broken into any safes in Moscow, but I would say that it's like Ray Dalio or Bill Ackman and these guys. They talk their position. I mean, if I wanted to buy treasuries, I might trash the treasury market and then go scoop them up.
Right.
So I don't know that for a fact, Danielle. I'm just saying that there's a war of words going on now. A couple other threads here. The BRICS are not working on an alternative currency. They are working on an alternative payment system. That payment system is different than a currency. They're working on rails, fiber optic cable, custodians, settlement, clearance, etc., for local currency transactions in rubles and yuan and Brazilian reais and other local currencies, but also dollar transactions. They still transact in dollars. They don't want to transact through a settlement system that the U.S. can interdict. So they've created their own settlement system, their own clearance, their own custodians, etc., which you could even have, which could basically be used for any currency. So the BRICS don't need another currency. And here's why: they already have one. It's gold. In other words, so you're Russia, you're selling a bunch of oil and natural gas to China, you're getting paid in yuan. You're China, you're selling a bunch of manufactured goods to Russia, you're getting paid in rubles. There's a trade surplus or deficit, could run either way. But bear in mind a couple of things. Number one, the net settlement is much smaller than the gross. If you pair off the gross payments up to a certain level, there's a net where somebody owes somebody, I owe you money or you owe me money, but the net is much smaller than the gross, and you can settle it in gold. So they don't need another currency. They have gold, which is one of the reasons they're buying gold. Now, so the BRICS are not working on new currency. The treasury market is not collapsing. And these are not just opinions, Danielle. I mean, the facts bear me out. The treasury market right now is rallying. It's going to rally more. I've recommended 10-year notes for a long time. So I said stablecoins were an enormous danger. They may cause the greatest financial catastrophe of all time, but it's not because the Russians think they're propping up the treasury market. The treasury market's fine. It's not because the BRICS are working on another currency. They already have one. It's called gold. Here's the danger. These are there are two dangers. The first one is these stablecoin sponsors are almost completely unregulated, non-transparent. No one has ever audited one of them. We don't know what's inside. Now, I'm not accusing anybody of any fraud. If I think that most stablecoin issuers do exactly what I said, which is they buy treasury bills or equivalent, very high quality, short-term, highly liquid instruments. But A, we don't know, and B, there's got to be at least one fraud out there, probably many. What's to stop a stablecoin issuer from taking the dollars, issuing stablecoins, and stealing the money? The answer is nothing. And how would we know? Well, we'll find out the hard way when when one of these dead fish surfaces. How do we know it's not was it FTX, Sam Bankman-Fried or whatever? So that's coming. I'm not accusing anyone of fraud. I think the vast majority of them are not frauds. They're doing what they say they do. But just experience go back to Robert Vesco in the early 60s. One of these guys is a fraud. We had no idea whom, and we'll find out the hard way. So that will start a panic. Now, the bigger danger is, let's go in the non-fraud area. They're doing everything we described. They're doing everything right. The time will come when Tether holders, I don't have to pick on Tether or any stablecoin holder, want their money back. I've been through, as I say about financial catastrophes, if I wasn't there, it didn't happen. I mean, I've seen every one. The time will come when people want their money back. The best definition of a financial crisis I've ever heard is everybody wants his money back. That's it. And so when that happens, these stablecoin holders are going to call their sponsors and say, "Give me my dollars. I want out. I want to get dollars right now." The Federal Reserve Bank of New York open market desk only deals with approved banks. They're called primary dealers. These are the market makers in the U.S. Treasury market. I was counsel and chief credit officer at one of the primary dealers for 10 years. I talk to the Fed every day. I understand this market in depth. Is the Treasury bill market the most liquid securities market in the world? Yes, it is, but it's not unlimited. Try selling $1 trillion of Treasury bills in one day. Good luck. They're going to shut the market. And so when you get this run on the bank, it's a classic run on the bank, probably accelerated by AI. But when you get this run on the stablecoin bank, these are what they are, Danielle. It's not complicated. They're basically unregulated money market funds. What happened to money market funds in October 2008? They froze up. The Fed bailed them out. They bailed out the commercial paper market and the money market funds. They broke the buck, and because they couldn't sell and they had Treasury bills, but they also had CDs. This was General Electric, who's the biggest issuer of commercial paper. They had commercial paper, CDs, etc. They couldn't sell them fast enough to pay off the claims. The market froze up, and the Fed bailed them out. Now, is the Fed going to bail out the stablecoin market? I don't think so. So you're going to have a financial panic of unprecedented proportions. The Treasury market is going to seize up, not because of China or Russia or anybody else, but because stablecoin sponsors are going to be selling Treasuries to get cash to pay off claims, and they're not going to be able to do it.
Wow. That makes a lot of sense, Jim, and it's absolutely frightening. But I also want to bring up, if we could see tie-ins to what's happening in Vietnam, which I feel is not getting enough press. Vietnam's mandatory biometric IDs led to, as I said in my intro, 86 million bank accounts being frozen or erased, framed as a security measure. Is this a testing ground for centralized digital control, do you think, Jim? And is the Genius Act going to pave the way for that to happen here?
Possibly. I think that as far as Vietnam is concerned, people forget they are communists. I mean, I know there's a prosperous economy and we're investing. I get all that, but they're still communists. Let's not forget who communists are. But yeah, it's a trial run. I mean, I've warned about central bank digital currencies for years. They're all these things, Danielle. They're sold on the basis of convenience. It's better, faster, cheaper. Credit cards are clunky, 2.5% fees. Get me a central bank digital currency. We can have our own account at the Fed on our iPhones, and I can send money to you. It's like Venmo with Venmo on the Fed wire, right? Except that they've got all your data. They know what books you're buying. They know what religion you are. They know what groups you contribute to. They know what political party you are. And when they want to profile you, seize your money and shut down your accounts, debanking, and that's going on. It's very easy to do. So, or just confiscate your money. So, which the U.S. is doing to the Russians. This is all happening all around us, and you're right about Vietnam. But we've seen it. We've seen it elsewhere. It happened in Cyprus in 2015. It's happened, over and over again. Yeah, get ready.
Well, I guess this is my question, because the narrative was, oh no, we made it. We signed that central bank digital currencies cannot be pushed forward. But this is just. I think I had another guest on once who put it beautifully that it's just a magic trick. Like, gone are the central bank digital currencies, but they're just ushered in under disguise. And that's what it feels like to me, Jim.
Well, I think you're right. First of all, you're correct that Trump issued orders saying you can't have a central bank digital currency. But the research, the R&D continues. They continue to develop it at the bank level. So bank to bank, B of A to Citi or Citi to Morgan Stanley, et cetera. That's going on. So do you and I have central bank digital currencies? No. But behind the curtain, the bank to bank blockchain transfer system is still being developed, so that when Trump won't be president forever and MAGA won't be dominant forever, when the time comes to impose this, it'll be very easy to do because they're continuing the R&D.
I guess my question I'm sure people are wondering this at home, Jim, because you gave so much incredible information, is if we're forced to be in the digital dollar of, it's backed by stable coin of whatever, we run the risk that our accounts and our money can be frozen, that we lose that control.
Well, yes, but not just the risk. It's going to happen. Show me a market where it didn't happen eventually. I mean, I can... They studied the history of financial panics. There were some in the mid-14th century, in the 1350s, the two biggest banks in Milan were the House of Bardi and the House of Peruzzi, and Florence rather, sorry, and they both froze up. It was, kind of played right into the Black Death. My point being, these things always happen. They will continue to happen. What's new is that it's digital, it's bigger, faster. AI plays a role because people are using AI to program their actions. So the redemption will be just like that. It's what
Right.
happens. It's what happens. Silicon Valley Bank. One tech billionaire gets on his iPhone or her iPhone and says, get my money out of Silicon Bank. Boom, send, and then calls his friend and say, get your money out fast. This was happening at, the speed of light is a cliche, but it was the speed
Well,
of
well,
light.
well, do you think that there should be a greater revolt against the Genius Act then? Are people get what's happening?
I People don't understand what's happening. Everything I just described to you and that you and I talked about is not part of the narrative. I think the narrative is, hey, it's all good. So no, people don't understand what's happening. They should. I've been writing about it and speaking about it.
Yeah. No, I know.
But
I know.
if you want to
I
boil it down, you can go on at length. But if you want to boil it down, stable coins are unregulated money market funds. Money market funds that were regulated froze up and were bailed out in 2008. What do you think is going to happen to an unregulated money market fund where we don't even know what's going on inside? We don't even know what they own. They're not audited.
So what is there anything, I know I always ask this, what can we do to fight back?
Well,
What can we do?
Yep. Well, first of all, everything we just talked about has the backing of the Trump White House. So, and Howard Lutnick and the Secretary of Commerce, Scott Bessent's on board, et cetera. So not much we can do in Washington. What can we do personally? Yeah, get some physical gold. I've always recommended 10%. Get have cash in the form of high quality bank deposits, not stable coin. Don't think of stable coins as cash, but real cash. And that can be treasury bills in a brokerage account or a bank account. Those actually are regulated. They are, up to $250,000. They're guaranteed by the FDIC. But with not much work, you can get up to millions of dollars of cash, all guaranteed by the FDIC, because the husband and wife can have multiple accounts. You can go to 5 different banks. There's a little paperwork involved, but it's not hard to get, $4 or $5 million in FDIC insured deposits, and that'll be fine. And other hard assets, real estate, et cetera.
How do you, as I know, I brought this up. You were a supporter of President Donald Trump.
Yes.
But you are critical. Is it a correct statement to say that you are against the Genius Act?
Yeah, I voted for Trump. I forget how many times, because I live in New Hampshire, so I voted in the primary. So, I voted for Trump like 6 times. Like, he ran 3 times. I voted, So yeah, I'm a big supporter of President Trump, and I have a lot of good things to say about a lot of his policies. But I'm also an analyst. I don't fall in line behind the narrative just because I like one party or another. And I've been very critical of certain Trump policies, and this is one of them.
Yeah, it's absolutely frightening. Just as a final note, and it is a heavy note, Jim, but I feel, how can I not bring it up to you? I have not been sleeping at night, as I'm sure most of the nation has not as well. There's just so much heaviness, and the political divide feels greater than ever. How do you make sense of what's going on? I know you have young grandkids too.
Yeah.
How do you explain this to your family of what's happening in the nation right now?
Well, of course, the biggest event in line with what you're describing, Danielle, is the assassination of Charlie Kirk. And I wrote a column on that. I did a couple interviews on it. I didn't know Charlie Kirk personally, but I
Right.
speak to a lot of people who do know him. And I had 2 observations. One was, among people who knew him, and it's a large group during the White House and cabinet and Washington, all over, not, Tucker Carlson, a lot of other people, every single person said kind of the same thing. There wasn't one bad word said about Charlie Kirk, not by anyone who knew him. And I'll leave the Jimmy Kimmels to their own devices, but of people who knew him, not one bad word. And I know people that I look up to, I admire, I study the work, but as I said, I can be a critic. I'm saying, yeah, really smart guy, follows stuff, a little rough around the edges, but he's okay. You didn't hear that about Charlie Kirk. Nobody said, he's okay most of the time, or he's rough around the edges, or it was like uniformly praiseworthy, generous, loving, obviously smart, et cetera. So that was one thing. He sort of stood out that way. But I spent most of February in India. And among the places in Delhi I went was the garden where Gandhi was assassinated. And it was a very eerie feeling, not because of what happened there, but I'd seen the movie Gandhi a couple of times. And it was filmed in that garden. They basically filmed it in the same place. So as I approached it, there was a little bit of a distance from the gate. As I approached it, I had this incredible sense of deja vu, like I had been there before, and it was because I was seeing what I'd seen in the movie, but there it was. And when I heard that Charlie Kirk was assassinated, my first thought was Gandhi, because, and obviously I've been there, but it's like Gandhi preached peace and love. Charlie Kirk talked about peace and love. And it was almost as if you talk about peace and love and you hold yourself out, they kill you. And that was my immediate takeaway, which is just, he's almost like too good for this world. So, but to kind of round that out, this assassination, this is not 24, 48, 72-hour news cycle. This is not just another, obviously bad turn. This is going to resonate for decades.
I
This
agree.
will be like, Robert F. Kennedy, Martin Luther King. This will resonate for decades, and his spirit will live on.
Jim, I thank you for your time today. Some pretty heavy topics here, and I am grateful that I can call on you to help make sense of it all. I truly am. Thank you for your time.
Thank you.
And thank you all for watching. We'll have more coming your way. Be sure to stay tuned to the Daniela Camboni Show.